And I just started on my first slide, so I'm going to go back and go over that again. So give me a second. I don't want y'all to miss anything.
Can y'all hear me?
See you. Yeah, we hear you loud and clear.
I can hear you too.
Welcome to a stock portfolio seminar. And so we started off, well, what is a stock? You know, a stock is a share of ownership in a corporation. That's a good way of saying it. A lot of companies are privately held. They don't never, for example, Chick-fil-A is as an example that comes to mind. They're privately owned. They're not on the New York Stock Exchange. But at some point, if they need venture capital, one way to get it is to go through the Financial Industrial Regulatory Authority and seek to get your company on the New York Stock Exchange, for example. There are other exchanges, but let's say they go through that process. It's a long, tedious process, but they will say that through their evaluation, they'll say this company is worth $25 million. And so you want to put 48% of your shares or percentage of ownership in the stocks, and that's equivalent. They'll do the math at, okay, we'll give you 1 million shares at $4 per share, whatever it is. And that'll be the opening, what they call IPO, initial public offering on the stock exchange. And that's how a stock gets going. So when you buy the stock, you're actually buying a piece of ownership in the company that you're buying. So it's quite a powerful thing. And also with that comes the right to vote. You know, if you own 10,000 shares or 10% or 20% of a company, they'll send out a proxy to your home saying, hey, we're having a board meeting, because you're actually an owner of the company. So you can go and say, okay, I want to put my votes or whatever they're voting on the agenda. You can go ahead and put your weight of your shares towards that vote. So it's quite of a powerful instrument if you've never done it. But there's also a thing called preferred stock. And preferred stock, it gives you a higher, it's a better instrument in that the dividend payments give you a higher priority with preferred stock. For example, if a company was to fold and go out of business and they filed for, what do you call it, bankruptcy, the preferred stockholders would get their share of money before the common stockholders. So they have preferential treatment when you look at stuff like foreclosure. So there's some advantages to having preferred stock, but most people just buy common stock. But anyway, I just wanted to point out there is a difference. Okay, so let's talk a little bit about investing in stocks. Well, unlike mutual funds, when last week we told you, you go, you study these mutual funds, and we use Vanguard as an example last week, and you can study the portfolio and the portfolio strategies and all of that. But you put your money in there and that guy manages it, or that gal manages the money for you. That's your last decision. You can set up your monthly allotment and that mutual fund manager does it all. You're hiring a professional to manage your money. Unlike stocks, you are picking these stocks based on your information, or someone's giving you a recommendation to buy it. And in any case, you need to know what you're doing when you're investing in stocks, because the proverbial saying, all your eggs are in one basket. If you buy, $5,000 worth of stock ABC, and it's trading at $10 a share, and next week it goes to $1 a share, you just lost 90% of your money, if it doesn't come back up. So, when you put all your eggs in one basket, it can be risky. I guess what I'm trying to say is investing in stock is about knowledge. It's about knowing as much as you can about that company and the operating factors that impact its performance. You need to know what you're doing, and you need accurate, timely information. So one of the things that I do, and I'm just sharing you what I do, I have some help. I prescribe to Morningstar, and I also pay money for an investor newsletter to help guide me, because there's millions of stocks out there. I don't have the time to go through and try to figure it all out. So I get Morningstar and a news advisor, a financial news advisor, to help me focus in on the hot ones, the ones that and then from there, I further go into my strategy and analysis that I will go share with you in a few minutes. So just want to share that with you. So that's the trick, one of the tricks that I do. I do not recommend stock investors for beginners. I think mutual funds is a much better place. So if somebody goes out there and loses all their money in stocks, you're not blaming me, because here it is on record. I'm telling you, don't play with stocks until you get some experience. But here's some tidbits on how to proceed once you get that experience. For example, Morningstar. Has anyone ever heard of it? Maybe you have, but it is a firm out of Chicago, and they do a whole bunch of financial recommendations. And I love Morningstar because they're kind of like, they put out a report basically on every stock out there and their opinion and rating about the company. And so they've got a lot of prestige. If you see a Morningstar rating of 4 or 5, that means they have gone through the gauntlet as far as being looked at, and those Morningstar financial analysts thinks that's a really good company. So, so that's something to look at, and I recommend doing that. There's a small fee for, being a subscriber to Morningstar, but I highly recommend it if you're going to put all your eggs in one basket, so to speak, and buy stocks. You need as much information to help you make a prudent decision. So Morningstar is where I recommend looking at that. And here's I took a snapshot of a Morningstar page. Go ahead, Angela.
Is that the same? Is that what Motley's Fool? Have you ever heard of Motley's Fool?
No, well, Motley Fool is a financial advisor as well, but they're not like Morningstar. Morningstar gives a report on everything. I mean, if you type in a 5-letter stock, Morningstar will have some report on it. Whereas Motley Fool, they're looking at what they want to recommend. They might be giving 5 recommendations this month, but only on those 5. If you ask them about something else, they're more of a focused on this is what you need to know. Where Morningstar, it's like a library of information on all stocks.
Okay.
So you can look up U.S. caps, small caps, mid caps, Standard & Poor. You can search, see where it search quotes. You can put up a search for whatever stock identifier that you have, and Morningstar will have something on it. They pretty much report on everything. But I'll talk about Motley Fools in a minute, because I'm a member. I pay for that, actually. So this is kind of what a Morningstar, if you put in a 4-letter identifier, so if you put in GOOG, here is their report. For example, they give this company called Alphabet, they give them a 4-star rating. And you can see that it gives you all kinds of information about this company. It's a dominant on-search research market firm, global shares 80%, on and on and on, leadership. So this is what you're paying for. If you're going to make a decision, that rating from Morningstar means that their analysts have looked at this company and they think it's a pretty good company. That's probably worth a few dollars if you're going to buy stocks to get that rating, because there's some companies out there with a 1 rating or 1 star, and and they look the same. And so having this inside information, again, stock investing is all about, I won't say inside trading, but that's not the right word. Having as much knowledge about that company as possible. So Morningstar is a great place. Morningstar is a great place to start. All right, so I'll give you another example of Morningstar. Here's this one I just pulled up from Wells Fargo. They really like Wells Fargo. Year-to-date return, 54.41%. Y'all might want to look at that company. Wells Fargo is doing extremely well. And then you can go read on about their strategy historically. I mean, they've been around for a long time, but they've been doing arguably some of the best networks in the U.S. That the middle marketing commercial space is a strong advisory network, and they go on and on and on and on. I don't want to get into the details, but again, Morningstar is going to really cut to the chase and give you a lot of good information about companies that you might be considering investing in. Okay. All right, let me go back to slide view, because this is it might be a little better to see. Okay, so you can see another one is Polaris. I've been looking about getting a Polaris ATV. So Polaris, I mean,
I can't see the slide.
38. You
You're
can't
not
see that?
No, you're not sharing.
I can't see the slides.
You can?
I cannot.
No, can't.
Oh my goodness. Oh
Can-
my gosh. Let me stop
Yes.
here.
And Sheila McAllister is trying to get in.
Okay, I'm letting her in there and okay, cool. Thank you. So we're gonna start sharing again. How about that? I'm a rookie at this Zoom stuff, I tell you.
See it
Can
now.
you see me now? You can?
Uh,
Y'all let me just go on and on and on without anyone saying a word. All right, I'm gonna go back and we talked about the stocks and preferred versus common stocks. And then I talked a little bit, for those who are coming in late, about investing in stocks, about really you putting all your eggs in one basket. So you really got to have a lot of knowledge before you do it. And I highly recommend getting some expert financial experts to help you. And I recommend Morningstar and an advisor newsletter of your choice. And Motley Fools is one of them that you might consider. And then I showed examples of what, let's show this. Let's make it a little bigger. Okay. Then I kind of showed examples of what Morningstar looks like. So, as you get into Morningstar, you can see you pick up, for example, Alphabet here. They rate this company 4 stars and they have information about it. So it's really kind of neat to be able to go to a financial advisor and get the skinny on a company. And they'll have a lot of insightful information that will help you in your decision process if you're looking at stocks. Here's another example, is Wells Fargo. Year-to-date return, 54.41%. Hey, I would really want to go take a look at a company that's getting that kind of return. So again, a lot of good information that you can get from Morningstar. Here's another one, Polaris, and this is where where we were when I let the last group in. 38.23% for Morningstar. For Polaris by Morningstar. Again, I do a lot of ATV, so this is something I will look at. They've been around for a long time. As a matter of fact, the government, you ever heard of the Polaris Ranger? Polaris has an excellent reputation with the military. Anyway, so again, Morningstar makes good recommendations that will help you and make good financial decisions. And then again, I subscribe to a newsletter. And so I highly recommend it. There's some really good companies out there. NVIDIA, we'll talk about that later. Here they are talking about NVIDIA and Adobe Systems. And so some of these financial newsletters will really help you hone in on the companies that you might want to consider investing in. Okay, let's go on. Okay, Motley Fools. Now I'm a member of Motley Fools. I don't like the word fools, but I think they chose it because if they ever get a bad advice or they give someone a financial recommendation and it goes south and they try to take Motley Fools to court, they can just stand up and say, look, we even tell you that we are fools. Now, why did you listen to us? It's a great strategy that they have. It gives them a way out in case they do ever eventually give bad advice. But I've found that what they have given, you look at, for example, Netflix, up 26,859%. They recommended that years ago. Amazon, back in the very few days, Motley Fools recommended that. So I listen to what Motley Fools is recommending. Right now, I got 3 investments that I have purchased in the last 30 days based on Motley Fools. I went and go, wait a minute, let me look at this company. Because I work 40 hours a week. I don't have time. Because when you start doing stocks, it can be a full-time job if you're trying to do all this yourself. And having these Morningstar and Motley Fools kind of help minimize the amount of time you need. It allows you to focus on the areas that are hot. And so I highly recommend that if you're interested in doing this stock stuff. Okay, that's enough of that. I thought about going into P&E ratio, price per earning ratios, and beta coefficients and get into a lot of heavy stuff. And I thought, Doc, this is not way too deep for a 1 hour stock. So instead I decided I'm just going to share with Third Baptist my strategy, because to do stock investments, you have to have a strategy. So I think that would be more valuable in this short period of time to talk about that than to try to go too deep in some of the stock analytical instruments out there. So I've already talked about one that I look at Morningstar financial newsletter, but there's some others out there like the MIT Technical Review magazine. I am a techco guy. I'm a tech person, and that has been where I have focused in on technical, innovative stocks. I look for things that will transform an industry. For example, if you had got Amazon back in 15 years ago, when no one heard of it, you'll be a million. Even if you had $10,000 investment, you'll be a multimillionaire today. So those innovative companies that transform the way we shop and spend, that's what I look for. And I use these magazines like the MIT Technical Review. I read. I like to read. I sit home and read articles. And every now and then I'll find, oh my God, look what this company is doing. That's innovative. No one has ever done that. And that's what I focus in. I guess what I'm trying to tell the group is I'm not a day trader. I don't come in and buy and sell, buy and sell, buy and sell. I study and look for innovation. And so I might make 3, 4, 5 trades a year. But those 5 trades are going to be heavy hitters. Something that's innovative, something that's transformational, something that I think is going to explode. I call it momentum stocks. For example, have anyone heard of NVIDIA? Back in 2016, I think there's someone in the room I even told about NVIDIA. So I was researching through technical magazines about NVIDIA in 2016. I think it's 2016. And when I found out, Steve Jobs back then, before he died, Apple, he really wanted an Apple car. I mean, there's all kinds of stuff in technical magazines about, but the computer technology wasn't fast enough to keep up with the processors. And I'm going, oh my gosh, what a shame. I mean, he's got a great idea, but the technology, so he put that aside. There was no Apple car during Jobs' lifetime, but he really wanted to go there. But then this company, now NVIDIA. Now, I know you've heard of NVIDIA because most of the graphic drivers on computers, I bet you your graphic driver, if you look in your computer, it's probably been created by NVIDIA. They're legendary for doing computer graphic cards. But anyway, NVIDIA developed this computer chip, and it's innovative. It was so quick and fast that it actually gave the speed and technology that it makes a electronic car possible. And matter of fact, when I saw that Tesla bought that car or bought that chip, I go, I've got to have NVIDIA. That's innovative. It's going to bring this new car with this new capability. And I jumped in. Of course, my little pennies, I only put a small amount, but oh my God, look how much money I made off of that small amount of money. In other words, if you get onto a great company, even if you have $1,000, that could turn into $100,000. I mean, so that's why I like this strategy, because it lets me focus on the innovative stocks that are transformational. Another example of a stock that I got into was once I got into NVIDIA, it pointed me to Tesla, and then I ended up buying some Tesla stock. Same thing, innovative first electric car, or one of the first really nice electric cars. And so I think this is going to be transformational. By 2030, 2040, most of us will be long gone with our gas cars, and we'll be driving all electric cars. If you don't believe it, just wait. In 10 years, you'll see transformational Tesla. And for one of my latest investments is called Skyworks Solutions. And I'll talk a little bit about that in Zoom. I'll talk about those 4 as examples of what I've been investing in. Okay, again, NVIDIA, this is with that chip. It was a Tesla M60 GPU chip. I mean, it was all in the news. It wasn't a secret. It was out there. It was there for you to read about. But most people, they don't look at this stuff, I guess. I don't know. But I do. I look at it. I go, this is going to transform the automotive industry, and I'm buying it. And I did. And I mean, here's some articles. I just went on the internet and just typed in the video, and here it comes. Up comes articles all about the power, IA breakthrough. I mean, it's just everywhere. So, and then again, I look back at 2016 when I was telling people about buying that stock. You could have got in for $100. I think I got in for a little bit over $100 a share. And it's now $711 a share as of when I took this, June the 16th is when I actually pasted this in the briefing. So, you know, it's been just 2 weeks old, but I'm just saying that's the kind of transformational. When you get a momentum stock like that, it's just going to transform the industry. I don't know how you lose money. You just can't lose. It's just about finding them. And there it is right there. Now, look at that thing. It's going crazy. I'm going to tell you the sad story, and I'm going to be honest with you. I bought in at 100 and I got out at $200. I doubled my money and I was so happy. I was like, hey, man, you know, I put in this month and I just doubled my money. You know, I can go there, go on another vacation, you know, instead of leaving it. So I'm very good at getting these stocks. I'm very bad at when to get out, because what I'm learning is I should never get out unless they start to go down. And so I'm learning that lessons. I'm not going to make that mistake again, but I did make it with NVIDIA. I got in, I made a lot of money, doubled my money, and I got out, and I really regret it, because look what it's done. I mean, I got out at 200 shares and now it's over 700. It's just amazing. So I'm just being honest with you. I hope y'all can accept it. Let me click to the next one. Tesla, I mean, everybody knows about Tesla. And look what it's doing right now. I mean, had you got in, shoot, even in 2020, I mean, you could have made a lot of money. I mean, the low was $36 a share. So when you find momentum stocks like this, and my problem is I find people that, especially people of Christ, there's something about a Christian. I want to share with them about this. And I have been so unsuccessful in getting anyone to listen to me. But it's like I want to share it. I mean, I've done all my research and I walk up to you and go, hey man, you need to buy this stock. And they go, yeah, Brother Lambert, get out of my face. And they go on, you know, it hasn't worked, but oh boy, if I just feel like I could be a blessing to some people, but if I could just get them to listen. Anyway, I'll leave that alone, but I'm just going to keep on going, but I'm making money. So, hey, anyway, this is what I've been working on this year. This company here. I'm going to tell you my strategy on this. It's innovative because I watched 3G network and 4G, and I've seen a whole bunch of folks become millionaires. And so I go, here comes 5G. I'm not missing it this time. I missed it doing 3G and 4G, but I said, I'm not going to miss it on 5G. So I did my research and I find out there were four companies, there might be a few more, but four major companies that were instrumental in developing the chip that makes a 4G phone 5G. Without this chip, it cannot be a 5G phone. And Skyworks, Qualcomm, there's a few companies, but Skyworks is one of them that I go, oh my God, look at this company. It's cheap. I can afford it. And I'm going to buy it. So I bought 100 shares of it. I'm not rich. I bought 100 shares. Okay. And so, but here's the thing I really want to make sure that y'all understand. I just don't buy a stock because it's got momentum and it's innovative. I also look at the environmental factors required for it to be successful. I have a little book and I'll go, okay, in order for this Skyworks to be really successful, obviously they got a chip, but one of the environmental factors that it's got to have to make this successful, we got to have that 5G network towers built across the US and all across the world. And so I'm finding out about that. And sure enough, I found out by January of 2021, those 5G network towers are going to all be built basically around the world. I go, okay, so that I checked that off, but I wasn't going to buy it until all of the environmental, little widgets have to line up. In other words, a good deal is not a good deal because all it takes is one thing to stop it. For example, the marijuana industry right now.
Excuse me.
Go ahead.
How does one how does one know how many shares are available? Like
Well,
you said a minute ago.
there could be, well, you can look at the stock exchange and see how many are traded. And if you did your research, you could find out that when the FINRA issued the stock, they issued them X number. But I mean, it's probably millions of shares. So I mean, if you need to know that, but I mean, for me, I said, okay, right now it's trading at $100 a share. I've got $10,000. I can buy 100 shares. I mean, what limits me is how much I have. You know, how much can I pull from, my savings account to buy those 100 shares or whatever. So that's what I do. I mean, my limiting factor is not how many shares out there, but how much money I have to buy it and can I afford it. So, and again, you're putting all your eggs in one basket. So I've showed y'all the process that I use I only look at innovative stocks, ones that I think that are absolutely going to explode. And then I look at the environmental factors that are necessary for it to explode. And if they all don't line up, I don't buy it because I don't have a lot of money to lose. So far I haven't lost any money because this is working. And I'm sharing you the strategy of how I do it. So I hope y'all, I could probably charge money for this information. Anyway, it's just a thought. Anyway, so that's what I do. I find these innovative stocks and I figure out the environmental factors necessary for it to be successful. And I don't check the box until I'm confident that it's going to come to fruition. And so that's how I do it. So let me go to the next slide. So this is what's happened. I bought in 2020, I think it was around January, and it was a little bit over, I don't know, $80 a share somewhere. And now it's 171. So, oh my gosh, I'm making money. I mean, it's just booming. I mean, I was looking at my portfolio. I don't want to say the numbers, but it's nice to see this kind of money just happening, all because I took the time to find something innovative that is going, 5G is coming. Why not get in? Because a lot of people have been getting rich. Like I said, I've seen a whole bunch of coworkers make a lot of money on 3G and 4G. How many times do I need to watch this before I get on board? I said, this time I'm on board, and I'm so happy that I did because it's doing very well. And again, you don't make the profit till you sell. Right now, I'm hoping that it's going to continue to go up. I think this is going to go in the 200 range. So I'm just going to let it climb. Again, my era has been always getting out too soon. So I'm sitting on my hands. That's hard for me because, I can go, oh man, I bought 100 shares, paid 10 grand. Now it's worth, oh my God, almost twice that, it's almost twice as much. I mean, that's about $7,500 I've made in profit just in the last 4 or 5 months. I mean, that's kind of cool. I mean, it's better than working at Walmart. Anyway, so I just share with you, if you find these innovative stocks, you can make some money for your family. And I'm just sharing with y'all how I do it. Zoom. My daughter brought this up to me. I looked at Zoom and I said, Zoom, I told my daughter, people are not going to do it. I mean, people already have, ways of telecommunicating. I was trying to think of the name of it. I just looked at one the other day. Microsoft Teams, you've got, there's several of them out there. Mm-hmm. Yeah, I go, I'm not buying Zoom. I'm not buying Zoom. I said the only way I'm going to buy Zoom if people can't go to work. And then in March, when COVID happened, my boss came in the office and says, y'all can't come to work. And that's when I started buying Zoom. I bought some shares for my daughter. I think she got in for about $100 a share. And so we got into Zoom because the environmental factors fell in line. People couldn't go to work. A lot of people are having to telework. I go, that's what I needed to see for me to buy Zoom. And sure enough, it happened, and we did, and we're laughing at the bank. Because right now, she got in at $100 a share. Now, I don't think she bought that many shares, but she got in, and now it's trading at 362 as of the 16th of June. And that's when I put these slides together. I'm sure the number could be a little higher or lower than that today if you check the identifier for Zoom. But I'm just showing you, when you find a momentum stock and you line up the environmental factors with it, and if they all say go, you got to go. Again, I really recommend mutual funds is a much safer way to invest, but I think a small percentage of money playing stocks can be very profitable. But I don't recommend jumping in unless you use a strategy like I'm sharing with you today, because it's hard for these companies to lose money when they're going up every day. How do you lose money when they're going up? You can't. So go for the ride, and I highly recommend it. Okay, so I've kind of shared with you my strategy. I mean, this is kind of a short session. I hope y'all got something out of it. I'm gonna just share with you what I'm looking at now. Right now, as you notice, the Hoover Dam is what is it, 158 inches below normal. It's been down for several years, and they're telling California, Arizona, and whatever, it's going to be monumental impact on electrical power production, because under Trump and whatever, under Obama, they got rid of the hydro, the gas turbine, a lot of them. They've really reduced the number of plants that, coal burning and all of that because of EPA. So now they're really dependent on these hydroelectric plants. And so this is going to create, again, my magic words, those operational environmental factors that are going to make it possible for some company to make a lot of money. All of these millions and millions of people of California, they're going to be shutting down their power. And that company that has that certain, maybe solar panels, they're going to be going, even though I would not have picked solar panels, but this environmental factor could really cause those companies that are selling key products to make a lot of money. And so here you go. So this is, again, I'm telling you what I haven't done. I'm telling you what I'm looking at already for later this summer, because I guarantee you, you're going to start hearing on the news, if you haven't already been listening, about the shortage in water in California and Arizona and Nevada. And all of those people out there are going to pay big bucks to get their power. And the company that's positioned to provide that power is going to make a lot of money. And if you own the stocks or shares, I'm just giving you ideas of what I'm looking at. I haven't bought anything yet, but I am starting to look at the electrical power companies and solar energy companies out in California and Arizona that are prominent, to see where I want to put my money. And again, I wouldn't be putting a lot, but I would probably want to get on board, because again, I think this is the potential for another momentum surge if you with the right company. So I'm just kind of sharing you what I've learned and what I do, and it works. I mean, I've never lost money doing this so far. I mean, it's hard to lose when you've got the right company that's providing a service that everybody's looking for. And that's what I do. So if I do 4 or 5 trades a year, that's it. But those 4 or 5 trades have been well researched, and I feel very confident that I'm going to make some money. And so far it works. So I've shared with you my strategy, a little bit about stocks. Again, you're putting all your eggs in one basket. It's all about knowledge and doing research. And I kind of shared with you of how I use the analytical financial advisor networks like Morningstar, and I use Motley Fools to help me focus. And then after that, I get my technical magazines, and I'll run into stuff. I go, oh my gosh, this could be another momentum stock. Oh my goodness, let me start watching it. Let me figure out what the environmental factors are that will cause that to explode. And then I put them on a piece of paper, and I go, yep, that one's. For example, right now, there's a big thing about, as you know, in Virginia, marijuana is now legal as of July 1st. Well, there's all kinds of marijuana stock companies out here. I have chosen not to get involved with that because those environmental factors haven't lined up for me. I don't see how it's going to be really that profitable when everybody has it. Actually, matter of fact, I think you can have 4 plants in your home there in Virginia. So why would I go out and buy marijuana when I can grow it at home if that was my desire? So again, I'm looking at environmental factors. So because of that, I have not got into those kind of stocks. But again, my strategy has been working. It helps me eliminate bad investments because I go, those environmental factors don't line up yet, I'm not buying it. So anyway, that's kind of what I wanted to share with you. I hopefully y'all got something out of it because I'm excited. When you're making money, it's exciting. I'm going to tell you right now.
Let
I
me
don't care
ask
what you
you,
say. When you're making money, it's exciting.
when it comes to stocks, is it easy to get so let's say you pay $100 for some stock and the stock goes up to $300 and you want to get your, let's say $5,000 out that you invested so you're not losing anything. Is it easy? Are there a lot of penalties for getting your money out?
No, stock trading is you. I mean, there's no 401k IRA, none of this. I mean, no, you're just trading on the stock exchange. You for example, I have Fidelity and I have Bank of America Merrill Edge, which is, you heard of Merrill Lynch?
Yeah.
Well, Merrill Lynch got an arrangement with Bank of America and they call it Merrill Edge. It's the same brokerage firm. They just changed the name because they're associated with Bank of America. So I have quite a bit there. So I just go on my phone and I can trade right here. I can pull up my Merrill Edge account and say sell, boom. And on the next trading day, because it's after 4 o'clock, so if I tell them to sell today, it will be, the broker would go on the floor for Merrill Edge and offer if I say I want to sell 100 shares, they'll offer you've seen it on Wall Street, that guy be out there trading he'll trade my 100 shares at the going price for tomorrow. And if it is high, then they will credit that money to your brokerage account.
And then
so I really recommend this group, y'all all go and open a brokerage account with somebody that you like. Fidelity is excellent. It's no fees. I mean, you can join literally for free. Just go online, open an account. It's confidential. Put $100 in there. It'll go into most likely a money market account. And then you just start putting your money in there and let it build up. And then when you're ready to trade, then you can trade if you're ready for stocks. And you can also do mutual funds through your brokerage firm as well. So, but I prefer to if I was going to do Vanguard, I would go to Vanguard. I wouldn't necessarily go through a broker to do with mutual funds. But if you're going to deal with stocks, then you want to do that. I think Christina asked me, if it wasn't this session, it was last session, about options. Certain things you want to do, like I sent out an article to a lot of you talking about selling short. Well, you have to have a margin account to do that. And that's a special account where you put money aside to say, I want to gamble. I want to pay, in other words, I want to buy 10 to 1. So I put a margin account and I can play, you can leverage your money that way. But that's more risk, and I don't recommend that. But having a brokerage account is the first step. And then as you get experience and want to try different things like selling short or maybe options and calls, I don't recommend that. But I mean, a lot of people make a lot of money doing these things when they get good at them. It's kind of like playing poker. I wouldn't go to Las Vegas and go out there and play poker because I couldn't tell you the difference between a full flush or a royal flush. I mean, I don't know. So it would be like taking candy from a baby. The same thing applies with stocks. You need to practice. You need to get a small account and play around with a few dollars and get the feel for it. Learn how the options work and and you need to play around with why you don't have money. Get good at it. And then as your knowledge grows, then you can start doing more things. But I really like my strategy. And I'm just going to tell you, this group here, when I get that next big momentum stock, don't be surprised that I whisper it in your ear. I'm not telling you that you have to buy it, but I'm going to laugh at you when it goes crazy. I mean, if I win again, I'm going to tell you, I told you so. I won't do that, but I will snicker. I will snicker. I mean, because I don't know what greater love it is than to share with somebody something that's transformational is going to make them a lot of money for free. You know, so I don't do it often, but when I have a hitter like NVIDIA, when I knew that stock was going to explode, and I told very people that I love, even at Third Baptist, I whispered to them, you need to check this out. But I'm going to tell you, it's really hard for us because we all are in our own worlds. And I know it's hard when you hear stuff, you're being targeted all the time by people, television networks, and who am I? Who's Doc Lambert? He don't know anything. I mean, so I understand why most people just don't, they're in one ear and out another. But I'm now that y'all are part of this investment kind of fundamental class, now you know there's a lot goes into this. So when you hear something from me, it's probably because I've already put my money where my mouth is. I will never tell you to buy something that I haven't already bought. So, I mean, now I'm not going to say I'm going to win. I'm sure eventually I'm going to lose some money, but let's knock on wood. Let's hopefully that doesn't happen, you know, until after the rapture.
Pray on it. I
Pray
said,
on it. That's right. You pray, ask the Lord to bless you. So far, the Lord has been blessing me real good. He's blessing me real good. And so I'm trying to bless y'all real good. Oh, Heavenly Father, I hope they get this message that, boy, there's so many opportunities to make revenue if you just, you know, just look. It's all on the internet. It's just focusing in. And I'll be happy to share with you what I'm looking at, because there's no secret. I mean, 4 or 5 people buying it, that's nothing. You know, if you tell it, you know, if you put it in the paper, I might be mad at you. But if you just in our group share the information, and maybe there might be one that you'd be willing to put $1 towards. Matter of fact, I remember Leslie, my daughter, she bought 1 share of a stock, 1 share, you know, not 100 shares. She bought 1, but she was in it. You know what I mean? And she made money off of it. So it's no small, I mean, there's no amount is too small to get in the game. And then once you start growing and making money at this, I tell you, it's pretty cool. It really is pretty cool. And you'll see, you know, that it's really easy to sell and buy stocks. I mean, I have the app right here on my phone, and I can show you the app. Can y'all see that? I don't know. Anyway, probably not.
What's the name of the app? What's the name of it?
It's called Merrill Edge. I mean, everybody has an app these days. So if you set up a brokerage company with Fidelity, they'll have a Fidelity app.
Is AIG a brokerage firm?
AIG is, yes, they are. They're a huge financial. They are into insurance. They're in all kinds of stuff. AIG. So, I mean, there's so many out there. I'm not going to tell you which one to go with, but pick one that I mean, I could go look up AIG and see the ratings on it. You ever heard of Moody and Best? Moody and Best is a rating company that rates investment firms. So if I type in AIG, I bet you I can find out quite a bit about AIG just right here on the internet. Come on, computer. Oh, you know what? I'm touching the wrong keyboard. Sorry.
While you're doing that, I have a question for you.
Go ahead.
Have you thought about cryptocurrency?
No. I looked at it about blockchain. I studied blockchain a year and a half ago when IBM was competing with blockchain and how they use that to verify and account for money. Blockchain is an exceptional program, and crypto has come out of that. But for example, if you looked at this currency, the crypto, it went down from 37,000 to 26,000 last week. A lot of people lost their shirts last week in crypto. I don't understand it well enough to put my money there. And because I don't understand it, it's only worth what you think it's worth. I mean, there's no product. For example, when I looked at NVIDIA, they got a product that they're producing. They got a computer chip that's going in a car, and people are buying these cars. I can measure that and understand that. But when you talk crypto, having some digital code in a lock safe. I don't understand it. So until I understand it, I'm staying away from it. And from what I'm seeing, I've made the right call not to get involved in it. Now, I might be a fool, excuse me for saying that word, but I might be wrong about it, but I haven't figured out why I should get into that crypto. There people are raving all about it, but for me, until I feel comfortable, again, I'm not trying to win on everything out there. I find something that I believe in, and that's what I go with. I don't believe in this crypto right now. I don't have any confidence. Even if you got in for a penny and you find out you made $100 off a penny, and next week is back to 2 cents, I don't have any confidence in currency that can fluctuate that much.
What I'm seeing is that, for example, Bitcoin has been around about 4 years, and companies or businesses are starting to take Bitcoin for payment.
Yes, they are.
And so Bitcoin right now is at what, 36,000 and some dollars. It started out.
Well, today, as of July the 6th, is 34,076 US dollars. I think you've missed the boat on. I mean, one coin you could have got for 10 cents probably 20 years ago, and now it's $34,000. So I don't have the money to buy a coin. This is one coin, 34,000. So there are other cryptocurrencies that you might want to look at.
Well, I'm looking at one right now.
Again, I have been looking at it, and I'm just telling you, Doc Lambert doesn't understand it enough to put my hard-earned money in it. And especially with the fluctuations that I'm seeing. I mean, people are losing their shirt, and sometimes people are getting rich. And maybe that, you know, like I said, I'm sticking with what I know. And I think it's a little late for Bitcoin. 10 years ago, if you got into Bitcoin 5 years ago, okay, but I don't know. I mean, maybe I'm wrong again. I don't know. Everybody has an opinion, and I'm not trying to dissuade anybody from Bitcoin, but I don't understand it. I just don't see the product, and I don't understand what you really, I mean, it's all just emotional buying. People driving the price up, but what's there to hold it up? You know, somebody gets on the news and says something and it goes the other way. I don't see what is the product that is being sold. You know, I understand Tesla. Every time they crank out a car, there's exchange of money for a product. I can get into that. But what is the product in Bitcoin? It's just emotional people trading and willing to pay more to get in. And that's all emotional driven. I mean, if you say something's worth $34,000 and willing to pay for it, then it is worth $34,000. But what's the difference when it was at zero in 2016? When it was literally at, it was $633.20 on the 14th of July of 2016. You could have got it for $662. What has changed from then to now? Other than just emotional people getting in willing to pay the money. And I just don't understand that. And I don't have any confidence. I mean, even if I made a lot of money at it, I would get out and put my money in the dollar as quickly as I could, because I feel that the dollar is not going to go to zero overnight. But Bitcoin or any of these cryptocurrencies, and again, I'm just speaking from Doc Lambert, I just don't get it. And I might be, y'all can laugh at me and it's being recorded that I said this, but I just don't understand it yet enough to, and I hear some of the financial institutions and schools are now starting to accept this cryptocurrency. Okay, fine. But I just don't, I can't advertise. I can't endorse it because I don't understand it. You have to find someone smarter than me to talk about Bitcoin, because I don't get it. Yeah, I mean, here's this latest article. It says Bitcoin has been hit by a wave of sinking volatility and low volume as it continues to consolidate into what, again, it's all emotion. It's all people just jumping in, trying to get, thinking they're going to get rich. But that's not what my strategy is based on. My strategy is based on innovation. And so I can't recommend it, but
what did you find
whatever.
about AIG? What did you find out about AIG?
Oh, okay. I diverged. Give me a second. I switched over to Bitcoin. Let me pull it up. AIG. Okay. AIG Retirement Service. They've been in the insurance business for years. It's called the American International Group. It's also known as AIG. It's an American multinational financial and insurance company. We were doing insurance products with them when I was with Prime America. So that's why I'm familiar with it. But they operate more than 80 countries. I mean, they're all around the world.
Yeah.
They've got $43.34 billion under management. The CEO is a guy named Brian Superali. It's an Italian guy. I mean, this is a huge multi financial insurance corporation. So, I mean, it's hard to knock them. They do good work. I mean, and they have very good Standard and Poor ratings. So,
Okay.
I mean, if you wanted to pick them, I would say go for it. I mean, that's a great company.
Well, the retirement from a former job I had,
Yes.
it's not a 401, but something else. It's with AIG. And I was just thinking I could just go ahead and use them and move that money around. Is that
Was
how?
it a 403B?
Yes.
Well, 403B is normally a company where it's set up for public servants like teachers and policemen.
This is the housing authority. Yeah.
Yeah, housing authority. A lot of nonprofits have 403Bs. I think even my wife has a 403B. So they're excellent instruments. So nothing wrong with a 403B. Let me type in a 403B. I mean, this information is so.
Yeah, but the taxes and penalties for pulling it out before you retire are kind of.
Well, any qualified plan, you have to be 59 and a half or a penalty. But you have to start pooling at 70 and a half. If you keep it after that, you also get penalties. But again, you've given the government, or the government has given you tax deferment as a result of putting money in this plan. In other words, your 1040, you put in that little amount that you put in your 403B, and they reduce your taxes that year that you file, whatever amount that you put in your 403B. So the government has done you a favor. And so when you hit 59 and a half, or whenever you start drawing it, they want their money back.
Yeah.
And that's what I don't like about it. I like the Roth. The Roth is a much better deal. For example, let's say I have 10,000 in a 403B and I have 10,000 in a Roth. It could be the same stock or whatever. It doesn't matter. One is a qualified plan and one is a Roth. Let's say in 15 years, you both just put 10,000 in and forgot about it. In 15 years, you go in and there's $150,000 in your account. In the 403B, 403 qualified plan, guess what? They gave you a tax break, right? You got a tax break on your contribution. So even though you put in $10,000, it's now worth, didn't I say 150,000? So you owe taxes on the whole $150,000, even though they really only gave you a tax break on the 10. You only put 10 in. So they saved you. Let's say you're the 30% federal income tax bracket. Let's say you save $2,000 in taxes. But now here it is 15 years later, and you say you got $150,000.
If I have
you owe whatever your tax bracket, you owe taxes on the whole $150,000. So if you're in the 30% tax bracket, that's $45,000 in taxes you got to pay the federal government. They only gave you 10. So to me,
can you hear me talking? Hello,
okay,
hello. Can you hear me talking?
Go ahead.
Okay.
Yeah, go ahead.
What I was saying about AIG was if I have that 403B with AIG, that means that I can still use AIG and just move that money into a Roth or mutual fund.
Okay, well, yes, you can. But okay, now if you have it in a 403, 403 is a qualified plan. You know, in other words, they gave you a tax advantage to get that. A Roth is an after-tax instrument. So if you convert your 403B to a Roth, you're going to have to pay the taxes that you didn't pay to turn it into a Roth. Just letting you
Okay,
know,
so
you can do it, but you have to pay the taxes that you did, that they gave you a break on. So if you do all the math and find out that they gave you a break on $4,000 or whatever the amount is, you're going to have to pay that $4,000 to turn it into a Roth. Now, what you can do to avoid that, just forget about your 403B and just say, I want all new contributions in my 403B to be Roth. And then they basically, you split them up. You have a part of your plan that's a qualified plan, and all the new contributions would be a Roth contributions. You see what I'm saying? That way you don't have to pay the money on which you've already contributed, especially if you have a lot of money. I mean, you might have to pay a big check to pay off those taxes. So you need to think about that.
Okay. All right. That's what I need to hear. Okay.
Deacon, Deacon Lambert, can I ask one last question?
Go ahead.
Okay.
But I don't think you're going to be the last.
Well, okay. So those companies that offer, they'll match what you agree to put in to your IRA. Should you try to put the maximum?
Absolutely. I mean, if
that they'll match.
My company my company has a 401k through Prudential, and my company matches up to 3%. That's like, you know, I put in $1, they put, I mean, if I put in, you know what I'm saying, they'll match 3%. Whatever I put in, they'll put in 3% too. I mean, that's just free money. You got to be crazy not to do that. You need to take advantage of that. Now, but if you're looking at retiring, and if you were there for my first seminar where we talked about compounding interest, you really want to put a lot more. I put in, I think the max contributions is, what is it, 20? I don't have, let me look it up. 401k max contribution for 2021. Okay, it's $19,500. It's the most you can put in. And I think I'm maxing it out. I'm putting the max amount that I can in that fund. I'm maxing it out. And if you're over 50, there's I think there's a $6,000 catch-up provision. So you can even put even more money. And the employees age 50 and older contribute a catch-up contribution. And that IRS catch-up contributions by 500. So it's now $6,500. It was $6,000. So in other words, you can put $25,000 into your 401k or 403b every year. And I mean, you can't put any more than that, but you can do that. And if you have the resources to do that, it would be prudent. It would really make your retirement life decisions a lot easier. You will never, I don't think you regret, the kind of money that you will have when you get of retirement age if you do that. And again, they're matching whatever your company matches too. That's even another bonus. So I don't know, most companies 3%, 4%, 5%, 6%, that's not unheard of. So I don't know what your company is, but take it all. And I would put the max amount in that 401k or 403b.
Well, I'm actually asking for my children who are just starting out. And although like when there's $19,000 max, that's like $1,600 a month out of their check. And I'm trying to explain to them something I didn't know. Although it seems like a very lot right now, for them to go ahead and try to invest it, or at least half of it, because of the compounded interest that you talked about in the first class.
Oh, yeah. Oh, yes, if you can get it into that money where it's compounding in investments of 12%, 13, 4%. Oh my gosh, it's amazing what that will do over time.
Well, I don't think
and a
I'm
lot of
going to be
people
able to
don't
talk them
realize that.
into
I don't think a lot of people
$1,600 a
do.
month, but maybe 800. So,
Well,
okay.
whatever.
Thank you very much.
You know, when I started with $166 a month. That's all I could afford.
Mhm.
You know, this is not about getting rich. This is just about, you know, being comfortable in life.
Yeah.
That's all, you know. Yeah, I'm not trying to get anybody rich. I'm just trying to get you so you can have options. You know, like right now,
I want
you
to be
know,
rich.
my employer is saying, you know, they told me they wanted me to come in and work on Father's Day. You know, when I came back from, I was in Helena, Texas. I mean, Helena, Montana. And I got back that Thursday, Friday, whatever, before Father's Day. And they said they wanted me to come in and work Saturday and Sunday because somebody got sick. And I go, well, here's my CAT card. Here's my company card. My daughter's coming in and my son's coming in to spend time with Father's Day. I have it on vacation. And you're going to just ignore all of that and ask me to come to work? Well, this is my last day at work. And you know why I can say that? Because I've been safe. And money is power. It gives me the option to tell these people, you don't own me.
Right.
You don't own me. When you come out your mouth and say something crazy like that, I got a daughter and son coming in, and they have got gifts to spend time the weekend with Father's Day, and you want me to go to work and leave my kids sitting home, and then I'm come out of town? Not in this life. And the only reason I can do that is because I have some money put away now. If I was broke, living check to check, I would have had to go in. That's what this money does for you. It gives you the options to say no when people ask you to do stupid things. And you know, that's the only real thing I like about it, is that I don't have no love for money, but the lack of money is a terrible thing. The lack of money is a terrible thing. So I'm trying to have enough to give me enough power that I can say no. That's all. That's it. That's freedom, to being able to say no.
I agree.
And,
I just want to say thank you,
like
and I'm going to say good night because I'm leaving. Thank you very much.
Okay. Well, good night. I certainly went on longer than I thought, and I
No.
appreciate you all. And I guess I'm going to say good night too. And I hopefully, you know, that if anyone needs any help, don't hesitate to call. This is the end of our series, and I hopefully it was beneficial. And I love you all. So on that note, I'll say good night.
Good night, and I will be contacting you.
Okay. And
if
good to see you, Frank.
And if you hear about something good, whisper it in my ear.
Oh yeah.
Absolutely.
Okay. Night.
Okay. Good night. I'll leave it at that.